Okay, let's have a look at October for 2017 for Delaney. So goods previously sold for 738 by Delaney were returned. This figure includes VAT at 23%. So you're going to find out how much the VAT is. At markup on cost of 20%. So that's going to help us calculate what the stock is. And Delaney issued a credit note for 700 due to delay in return of these goods. That 700 is going to reduce our debtors. And then we're going to find out what is the VAT, find out what is the stock, and find out how much is going to be adjusted in the profit and loss account. So your debtors are going to reduce by 700, as we said. Remember, debtors is an asset. To reduce your assets, we're going to put in the debit side. To calculate your VAT then, so 738 is equal to 123%. So remember, 738 is how much they returned. It includes VAT at 23%. So 1% is equal to 6. 100% is equal to 600. So with that then, that was the value of the stock that we sold. 730 is what the person pays, so your VAT is going to be 138. So remember, your VAT is a liability. So to decrease the liability, we put it on the debit side. X your margin then, so your margin on your cost, so how much of a profit do we sell, and your cost was 600. This was 120%. So 1% is equal to 5, 100% then is equal to 500. So 500 then is how much your stock is. So we're increasing our stock by 500 because the goods are coming back to us. And then our profit and loss account then is going to be affected by your debtors were 700. That's the credit note. Your VAT then 138. So the value of our sales was 562. That was made up of your stock then of 500. So the difference is going to be 62. So that's how much is going to affect our profit and loss account. So our profit and loss is going to go down by 62 euro. So if we add our credit side up, we got 700, and on our debit side then we'll have 700 as well. So let's put these into our tabular statement. So our debtors first are going to decrease by 700. And our stock also then is going to increase by 500. It's going to increase by 500. We have VAT then of 138 and our profit then of 62. So our VAT then is going to go down. So make sure you put these in the correct column as well. So our VAT is going to go down by 138. Then we also said our profit and loss is going to go down by 62. So you got minus 200 for our assets. And we'll have minus 200 then for our liabilities. So just on that one again, it's telling us that goods previously sold for 738 were returned to Delaney. This figure included VAT of 23%, so you can find out how much our VAT is, and markup on cost of 20%. So it's going to tell us how to calculate our stock then based on what the markup was. And he issued 700 due to Delaney returning these goods. So 700 then is how much we're going to reduce our debtors by. So with the adjustments on it then, so 700 we're going to credit our debtors. So our debtors are going to go down by 700. We calculate what our VAT was. So our VAT, remember this was sales, so it's going to reduce the amount of VAT that we owe. Our stock then was 500, so it's going to be increased by 500. And then the difference then is how much we're going to make, or how much we need to reduce our profit and loss based on these goods being returned to us. And that's October adjustment completed.